It is May 2025 and we have a new government. Whether you voted for the Liberals or not, they are here and they're probably going to be here for a little while. So let's see what's been happening to our market over the last month. We've got some interesting stats that we've never talked about before, and we've got some migration information from other provinces that are quite shocking. But first, if you want to get our market update report, we've created a specific report. It's in the description. Go there, grab the whole PDF, as it's going to have a ton of information for you, way more than we're going to go over in this video today. But let's talk about the government first. So the Liberals got in, they won. I was on my seat the whole night watching on Monday night what was happening.
Here I come. Here I come.
I was actually really surprised to see such a large gap at the beginning between the Conservatives and Liberals, and kind of throughout the night how Conservatives came back. And again, that's kind of how polls were closing, right, as it went across the country. But regardless, this is where we're at. So let's talk about a few of the things that the Liberal government has been saying that they would be doing, and kind of what we kind of think about that. Now, we're not going to know a lot until we start living out what they are doing in the policies. But at this point, they were talking about no GST on new or drastically modified, so renovated homes up to $1 million, only for first-time buyers only. Now, that hasn't come into effect yet, but that is something they were talking about. They also had their whole Build Canada homes. Now, we're at $25 billion in financing was going to go to prefab homes and $10 billion to affordable homes. So this, again, we'll see how this plays out and what it all looks like. Immigration, well, this is going to be incrementally stronger under the Carney, so the Liberals versus the Conservatives. So we're going to see more immigration. It's going to be less than what it has been from what we've been told, but we'll see how that all plays out. Now, there's one thing that I didn't really see too much talked about at all, but there is definitely going to be more of a focus on rentals versus ownership with their plan. Now, I know they're bringing $25 billion in financing for prefab and $10 billion for affordable properties, but what really wasn't talked about was this thing called MERB, which is a multi-unit residential building tax deduction program, where essentially what it does, this was done in the 70s, and it was done for a number of years, and it was pulled back because it was such a big loophole, tax loophole for wealthy individuals, where what you would do is if you were building multi-unit properties, you could actually depreciate that building and the expenses against your earned income. So this is something they've talked about doing, and if this gets pushed through, well, this is gonna bring a huge rental supply to our country, which I don't know if we really need. But at the end of the day, that's what they're talking about. So a really interesting article that came out this week was all talking about those that are migrating across the country between the ages of 25 and 44. And this is fascinating. When you look at the stats, look at this right here, Alberta. Alberta in 2024 saw 18,400 young workers move from other provinces to Alberta. This is great. This is a huge thing. Now, the other provinces, Ontario, they lost about 8,100 individuals. Manitoba lost about 3,100. Quebec lost 21 or 2,200. And BC lost about 1,700. And as you can see, this is probably the highest that it's been. Again, I'm not sure if this is going to be perfectly straight because I can't fully see it, but you can see that line. Like the last year, that has been the highest that we have seen since, what was this, 1976. So there's a lot of individuals who are between the ages of 25 to 44 who are moving to Alberta. And I have a sneaky suspicion that we could continue to see that with the recent changes of the government. Maybe. But these individuals, they're in their peak productivity years, right? They really drive consumption. They're looking for homes, they're buying cars, they're growing their families, they're really taking career risks, entrepreneurship, they're investors. They are really driving the economy. And having that many individuals move to our province and move to our city, this is great. So let's take a look at what is happening in the whole city. So last month, we ended up seeing the inventory rise, right? So the inventory went up to 5,867 units, which is 116% increase year over year. And we had about 5,154 last month. So it's gone up from 5,100 to 5,800. And when you break it out based on product types, the detached homes had the largest month over month increase of 124% actually. 2,500 homes of inventory were detached homes. 484 were semis, 1,005 were row homes, and apartments had 1,867. And they all went up between 9 to 22%. So there's a growth in everything, but detached homes really jumped when it came to how many new inventory there was at the end of last month. Now, when we look at sales, this is down here in the red, there was 2,236 sales, which is a 22% decrease year over year. Now, interesting fact, I have a whole video coming out in about a week or two that's all about the luxury market, and the luxury market, $1 million homes and over, went up 7% for number of sales year over year, which is kind of interesting. Now, when it comes to our benchmark price, this is up here in the green. Our benchmark price did actually decrease slightly year over year, down 1.4%, right around $591,100. And it was only about 0.25% less than last month. So it really basically stayed the same. Now, if you look at where the different areas are based on the benchmark prices, the only area that we saw an increase based on the zones kind of thing, the MLS zones, was in the south at $590,000, which was a 0.2% increase. Everywhere else we saw a decrease, with the largest decreases happening in the city center and the northeast. And then, actually, I lied. The north had the largest decrease of 2.9%, followed by northeast and followed by city center, and then everything else in the middle there. But the only one that we saw an increase year over year was the south. Kind of interesting. Now, if we take a look at what is happening for new listings per month coming on the market, we were sitting at 4,038 new listings that came on last month, which essentially is pretty much the exact same as we saw last month, the month before, I should say. Now, this isn't surprising to me. One thing you're going to notice is last month, in the month of April, it was almost like there was a pause in the market. We had tariffs come in, and then we had an election. Now, since the election, the rest of this week, it's kind of gotten a lot busier. So I am really thinking that now that the election's out of the way, we know who our government is. There's a lot of people sitting on the sidelines, and this is where we saw some pauses. Now, definitely in the sales, you kind of saw that pause where most, like I was suspecting if we didn't have the election, we probably would have saw this sale number more, I'll do a dark blue kind of, but more in this range, kind of like higher 2,800 kind of numbers. So there probably would have been more sales is my guess. Now, what I suspect is going to happen is as we move into May, this is where we're probably going to see this number go, is most likely sales are going to increase, which is kind of a good thing. There's still a lot of demand in our market. There's a lot of people moving here who are younger, all that kind of stuff, right? So supply is short still. And when you look at the inventory per month, this inventory did jump. And you can see other years where there was some jumps, like through here and through here. But we're still right in this middle range. And that's really what we're going to see. And we're probably going to see, yeah, my gut is that we're probably going to see kind of a 7,000 number at some point as we really lean into the spring market. So I think our spring market was semi-delayed. There was definitely a lot of activity that happened this last month. But I believe that we're going to see more as we move into May and June and maybe even July. Now, this is something I find fascinating. I have never pulled a chart like this, and I've never seen anyone else talk about this. But last month, I looked at all of the sales in the city, just Calgary, and I looked at what was the occupancy status. So we've got show homes, we've got tenants, we've got new never occupied, we got vacants, and we got owner occupied properties. And you can kind of see some trends in here. Okay, so let's start with this. So let's start with vacant properties because it's the red showing up right here. Where you are seeing the majority of vacant properties based on like kind of the number of the price ranges that are here, you are definitely seeing kind of like from here all the way, see how it kind of does this, and then it drops off. The vacant properties essentially drops off right around this area, which is about the 650 to 700 range, which is kind of interesting, okay? And then you end up seeing this blue line, which is owner occupied, and it does this. So now you can see how many owner occupied, where it is higher down here, but you definitely have a higher, there you go. You definitely have a higher vacant types of properties in the lower price ranges than you do owner occupied. So when you look at that, tied, I'm gonna do yellow over here, with this right here between 1 to 1.5, this is your new never occupied. So here's what I kind of, when you kind of look at this. Oh, and there's one more, tenant. Let's look at tenants. It's kind of hard to see, but it's a green one in here. So if you look here, you can see a lot of tenant, and then it tapers off down this way. So here's what I make of this. And here's what I think is kind of interesting when you look at this. We end up having a bunch of people who had properties that were in the price ranges under 500,000, move up and buy properties kind of up to, let's call it 800,000. Totally making this up. Not really, but they moved up into different areas. Now, because the market shifted for the condo market and things aren't moving as quickly, they're sitting vacant. And now they have a vacant property on the market where those that are trying to sell are active. They kind of this mid-range of your 500,000 to 800,000 range, there's way more homeowners selling in there. And basically what that says to me is they're either selling to go down or they're selling to go up or they're leaving, something like that, right? So that is kind of what we're expecting to see there. And then you end up having the tenants. Now this is the green. And so the rental market has shifted. I haven't pulled the stats on vacancy rates or how many rentals are on the market, all that stuff. I haven't done that yet. And I don't know if I will at some point, but what was interesting, and I know the vacancy rates have increased. So there's more vacancies in rentals. And I know that rental rates have softened while properties and detached homes and those kind of things, they have actually stayed really strong. What that says to me is that there are a bunch of landlords who may have not been able to sell their property and they had to keep it and buy something when they're upsizing, or they did this a long time ago and that was the plan, or they did it over COVID or whatever it was. They ended up kind of having a rental, and there might have been rentals they've had for a while. And there might just not be the same amount of people, which I know there isn't, who are looking to get rentals. And so now when they're looking at selling, there's a lot of properties that are trying to be sold with tenants. Now, I don't know the increase compared to other months. That's going to be hard to pull unless you look at sold data. But I just find it interesting that we have a lot more vacant and we have a lot more tenant properties versus the owner occupied in the lower price ranges, call it under 600,000, compared to the higher. And finally, after I've scribbled all over this chart, the last one is this new never occupied. I find it very, very interesting that there is a large percentage of never occupied and new properties that are between 1 million to 1.5 million sitting on the market compared to everything else. What that says to me is that there are a lot of builders, and most likely my gut says these are going to be more inner city or higher end homes in neighborhoods that are on the market. But my gut probably is there's more inner city properties over $1 million that were spec builds by builders that are just sitting vacant. And they kind of created a mismatch with what they built to what the buyer wants. And so they don't have a great marketing strategy. They don't have great exposure. They're kind of lost in the mix. And they kind of need a plan to get out of it because they have high competition. And so I find this all kind of interesting. Take what you want from it. We've never really talked about it, but do remember that we have the PDF in the description with our whole market report for this month, where we dive into Okotoks, Cochrane, all the areas, all the price ranges, as well as all the different product types. And we have some write-ups, everything in there. So jump in there, grab it if you need it. But I'm going to continue on because we need to talk about months of inventory. So the city is sitting at 2.62. You can see it finally decided to jump up over the 2.5 line. Now, this time last year, we were sitting at 0.94. So there's definitely a large increase, which we know, but we're still kind of barely flirting the whole city into that balanced market. So there is still a lack of supply. There still is a decent and a good amount of demand that is keeping things going. Now, if you break this out into the different product types, detached homes are sitting at 2.28 months of inventory. Semi-detached are sitting at 2.55. Row homes, townhomes are sitting at 2.83. And apartments are sitting at 3.17. So you can see that even though we had a big growth of the detached homes, because it was like, 124% growth in the inventory month over month from 2 months ago to last month, they're still sitting at 2.2 months of inventory. So take with that what you may. But then if you break all of this out and you look in the zones of where things are at, you can see between the 90-day and the 30-day. So again, 90-day is looking a little bit further, 30-day is closer. And if the 30-day is higher, that means the market is slowing down or moving into a balanced market, or it's moving up versus down. And then if the 30-day is lower, then we're seeing that market speed up and moving downwards into a balanced or a seller's market, right? So when we look at this, 2.5 is right here, 4 months is here. So this is our buyers, balanced, and sellers market. So the Northwest and the South, as well as the East and the Southeast, they are all moving into or are in a seller's market. The city center has gotten quicker, moved into its spring market that we're expecting, but they're sitting at 2.9 months and a 3.2 over their 90 days. And the West is like 2.54. So technically it's just flirting with that number there. And then the Northeast, it is actually slowing down slightly from 4.55 to 4.59, but ultimately the whole Northeast is sitting at around 4.5 months of inventory. So we're probably going to see more price pressure in the Northeast compared to somewhere like the Northwest or the South. Like that's kind of what that looks like there. When we look at $1 million or less, this is that range there. Love my scribbles. And then if we're looking at $1 million and over, that is this here. I want to make this pretty. There we go. Once you hit $950,000, everything here is pretty much in a seller's market or really, really close to a seller's market. Once we hit 950 to $1 million, then it shifts to 3.7 months of inventory. So it's a higher balance market. But then once you go over $1 million, I find this so interesting, all the way up to about 1.3 million, which is this section right here, you're actually in like a seller's and a balanced market. And then it isn't until you hit 1.8 million and over, that the market starts increasing in terms of being more in a buyer's market. So it is quite fascinating that there are these little pockets of like 950 to a million and 1.3 to 1.4, all the way up to 1.8 or 7 million. Everything else is still kind of sitting in that seller's or a low balanced market, where everything else is kind of in the higher range. So this just still shows you, even though we had increase of inventory, we had kind of the same amount of new listings, and we had kind of the same amount of sales we did the month before, we're still sitting in these types of markets. Now, as we walk into May, June, and July, I truly think we're going to start seeing our spring market finally coming because of the election. Everything's over. And what is also interesting is the percentage of off-market properties. So what this shows us is there was 2,236 sales, but here, I don't have the numbers live, but it's probably about, I don't know, 1,100 or so. It's 49% of the sales that happened actually had homes that went off the market, expired, terminated, withdrawn, taken off the market. This time last year, let's see, we were at 15%. So this is something we've noticed as the market is shifting. There are a lot of sellers who are trying to sell their properties and not getting the prices they thought they would get. It doesn't mean that prices are dropping. What it means is they were expecting it to go even higher than last year, and it's not doing that. So there's half of the homes that sold actually went off the market. I threw a lot of stats at you. I hope this has been helpful. If we can help in any way, jump in the comments, jump in the description, let us know how we can help you as you figure out your real estate journey here in Calgary as we enter our spring market. But hey, we'll see you up in this video next, and have a fantastic rest of your week.